Stop. Before you buy the shares in Pricol, you need to see this. This company is posting an incredible 50% profit growth, making it look like a dream stock. But based on my analysis, that this type of exceptional growth is a double-edged sword that could turn this business into a measurable weak stock overnight. Hi, I welcome you all to Financial Vanguard. I'm Karthik. Today, we are going to deep dive into a company called Pricol. This company is an automotive component manufacturer. They manufacture instrument clusters that you see in your scooters, and they dominate the two-wheeler market by 50%. So let us deep dive into this company. As we can see from the slide, in 1972 it was started, and its headquarters is in Coimbatore, and it is an automotive component manufacturer, and their key managements are Vijay Mohan and Vikram Mohan. Their business is dominated by three segments. So in the next slide we'll be seeing that. So their business is dominated by three segments. The three segments are driver information system, and control fluid management system, and sensors and switches. The driver information system is nothing but the instrument cluster business, which accounts for 55% of their revenue and holds 50% of market share in the two-wheeler market. And the control and fluid management system accounts for 30%, and sensors and switches account for 15%. And who could be their major clients? Their major clients are Bajaj, Honda, Hero, and TVS in the two-wheeler market. So on the upcoming slide, let us see how much they spend on their R&D. So approximately 4.5% of their revenue is spent on R&D, where they are entering into new business in a battery management system. By entering into battery management system, which will give them growth in EV segment. In the upcoming slide, let us see on the revenue. So this is where the story gets interesting. Over a 5-year, sales have grown by 17% and profit after tax by 50%. The net profit jumped from 42 crores in March 21 to 167 crores in March 25. But as an investor, what we have to see? हमें क्या देखना चाहिए? The point one could be that we are not buying any company at a higher valuation. The market typically keeps a 50% growth company in an exorbitant price, in a high valuation. Pricol medium PE could be seen in the next slide. The Pricol medium PE is at 32.9, and the great part is that if this profit growth slows down, guess what could happen? The stock price will automatically go down, and the person bought at a high PE should sell it in the loss or should wait till the profit increases. So let us talk about the operating risk. Let us assume the high PE growth is driven by the operating leverage. The high profit after tax is driven by the operating leverage, that is fixed cost. If sales drop and the high fixed cost affects the profit to crash much faster than the sales. So let us assume with an example. So let us consider sales of around 200 for this year. In instrument and cluster system, they have sold 200 units, and their fixed cost is around 500. And their revenue from this is around 1 lakh. Let us assume that. So in case the sales drop, let us assume they have sold only 150 instrument and clusters. Let us assume they have sold only 150 infotainment systems this year, but their fixed cost is same. Guess what would happen to the revenue? Automatically the revenue should slow down, should decrease, and their revenue becomes 75,000. And their revenue becomes 75,000. So should we buy Pricol share? No doubt the business is strong and the management is stable. Let us see about the strengths and the weakness of the business. Profit growth. The sales CAGR is around 17.49%, but the profit after tax, that is the PAT, is grown by 50%. This means the company is growing its profit much faster than their revenue. So that means they have good amount of demand for their products. That means their product is impacting the society. What could be the weaknesses of the Pricol? Highly valuated right now. It is a 1 point, because the medium PE is 32.9 and the current valuation of Pricol is at the 40 PE, price to earning. So if in case sales drop, the fixed cost of the product will affect the profits, as we saw it in the previous slide. What could be the another weakness? The automotive component industry is highly competitive, especially for OEM manufacturers. If their competitors offer low cost, then obviously their clients will move towards them. That could be so that is the other weakness. So should we buy the Pricol share? I suggest to wait for a price correction before considering to entry. Always focus on buying great business at a right value. Don't buy any company shares at a high valuation that affects your profit. Always focus on reducing the losses. Thank you for watching. If you need any company analysis, comment down. I will make a video.